Good morning, good afternoon, good evening from wherever you happen to be listening today. Welcome to the opportunity to hear from Efma and Capgemini's report on the World Retail Banking 2021 report. There's no doubt that the world is changing dramatically in the world of retail banking, and I'm delighted in terms of representing Efma that we're working yet again with Capgemini on developing an environment that really shares some superb insights with banks around the world. It's great today to have Elias Kanem from Global Head of Market Intelligence at Capgemini, to hear also from Laurent Herbillon, who's here from BNP Paribas, and alongside that to have Jennifer Lindstrom coming from Capgemini Invent, and also Andrendram Chowdhury, who is from Capgemini Financial Services. So some quality speakers today talking about some quality information that's been shared with you this afternoon, and I hope you find it particularly interesting. What we'll do as we go along is after each of the events, after each of the presentations, opportunity for brief questions. So if people want to raise questions, please do that in the normal way. But in the meantime, let me pass over to Elias and take us through this report, which the slides of which will appear in front of you. Elias.
John, thank you so much, and welcome everybody to this report. I am the Global Head of the Market Intelligence at Capgemini, and it's my pleasure to share with you the World Retail Banking Report 2021. And as John said, a lot has happened in the last year, and what is very important is how we can try to come together and move into what we describe as for this year as the sustainable experiential banking. This report is our 18th editions, and we've been gathering information for the last many years. The way we do every report is we talk to a lot of customers. We have interviewed more than 8,000 customers around the world. We also engage with the banking community. More than 120 executives has participated. And also we get the sense of what's happening from the market through engagement with Temenos, Pega, and Salesforce. If I were to summarize where do we stand into this today into the banking, the COVID-19 created a very different landscape and has pushed us to evolve into a new era that we describe at Capgemini as Banking 4.x. And the key message is we want to see with you if you are ready to lead the charge. If we were to summarize the report into a single slide, this is it. First, it's time to embrace disruption and align your priorities and your relevancy as well as your resilience towards the new banking called Banking 4.x. How to make that happen? By embedding finance in customer lifestyle, making banking ubiquitous as well as inclusive. And to make it happen, it's about the platform-based model, and that will be an opportunity to discuss it later on with Laurent Herbillon about how BNPP moved into the platform-based banking. And then once you embedded the finance, it's time to leverage something that you already have a lot into the banking industry. It's about harvesting data to create the experiential customer journey that the customer are looking for, and how to make it happen through intelligent as well as personalized engagement. Let's deep dive in each one of these elements and see what we could learn together today. So clearly, by all means, the pandemic is forcing us to change the way we do and has forced a sweeping change within a compressed time frame. I was talking to a banker who said in the last 12 months, they made a jump of 10 years when it comes to innovation and digitalization of the processes. So let's get it. We are in a significant influx situation. There is a major volatility, uncertainty, complexity, and ambiguity environment, the famous VUCA environment. And it's time to get into a very different mindset in order to rationalize cost and continue working in terms of profitability. So what is disrupting the banking? This is what the executive told us. Clearly, competition for new age players. This is new. It was nice to have. I mean, we were observing them. Now these new players are really starting to be present. the changing regulatory landscape, the economic uncertainty, the technology advancement and adoption, and finally, and more importantly, the evolving of the customer behavior. And it's very easy to link the last one with the first one. Why do customers are changing? Because there is a new offer in the market, a much more digital one and a much more engaging one. So all this situation is creating an impact in terms of cost, rising cost, and an impact in revenue growth, mainly also reinforced by the low interest rate that we've been living in. So when we asked the executive in terms of what are you working on, they told us two things. The first message they gave us is, I am significantly rethinking the IT spending priority. How? Through an outsourced mindset towards the mid and the back office activity, links quite well to the platform that we will be discussing a lot about it, decreasing the IT budget for maintenance, postponing large investment, and finally, also be careful with my investment for new initiative. If you don't invest, you need to continue doing it, and the way to do it is by engaging with a third party. And on top of rethinking, they are restructuring. And there is a major effort that the bankers are doing in restructuring the banking operation through an optimization of the workforce, through reducing, selecting the market, scaling down on non-performing business, exiting from geographies, as well as closing branches, which is a very important topic that we are seeing. So it's with current situation, banks are seriously jumping into deep state of perplexity. Why are we saying that? Because clearly today there is an urgency to transform, and it has created significant challenges and dilemma for the bankers. How to move forward? And today, when we ask the executives in terms of their uncertainty, look at the level of uncertainty. 48% of the executive are uncertain in terms of how to embrace open banking and orchestrate the open ecosystem, how to compete against new age player, how to harvest the data, how to prioritize tech investment, and finally, what is the role of branches into the future. All these are coming together and are making the situation much more complex on what is happening. So now moving forward, there is also a gap between what the customer is looking for and the banking priority. Clearly, we are seeing that when we ask the customers what is on top of their mind is an omni-channel experience. 76% of the customers are saying that, while it's only 58% of the bank priority. When we go down here, and the key bank priority are saying on demand, anywhere, anytime customer service. And we could see the difference between the customer expectation and the bank priority. So banking will never be the same. It's time to embrace transformation by focusing on being resilient, but also being relevant to the consumer at the end of the day. So the day after is complex, and the day after is a mix of several things that we could see before COVID and after COVID. If I look at pre-COVID, it was all about siloed digital and branch banking, broken customer journey, product-centric approach, face-to-face branches operation. When we look into the post-COVID, as the economy is reopening as we speak, it's about having an integrated banking. It's having an end-to-end digital journey with an unbroken links where I can open my account, sign my contract, engage with my provider, all without having to print, sign, and or mail something. It's about shifting from a product to a customer approach. It's about harvesting the data, and it's about completely changing the workforce, more and more remote, and many branches will not open as the market comes back into the situation. And it's about really creating a different and new ecosystem where the bank is embedded across the customer life cycle. And we call it, this is the end of the open banking, and it's about welcoming the new era, banking 4.x. So you might be wondering, what is banking 4.x? Let's try to find it together. So there have been we have identified 4 evolutions into the banking industry. We call it banking 1.0 is the traditional banking, which is a fully integrated, vertically integrated bank where producing and distributing is in the hands of the bank. This is banking 1.0. We moved to banking 2.0 after the crisis of 2008, where it turns heavily regulated post the subprime crisis, and that has created a very regulated banking, and it was the beginning of the digital banking. That got us to the era of open banking, where the regulator stepped in and forced the bank to open themselves to the world through the open banking era. But at Capgemini, we said it's not only about open banking, it's about, we came up with this concept last 2 years, about banking 4.0 that we describe at Capgemini as banking as OpenX, where a new ecosystem opens to offer the right experience. And this OpenX is about an evolution from a product-centric to an experience-centric. It's an evolution from an asset management to a data management, know me for who I am, and how to deliver that through shared access and partnership. This was the OpenX that we said. And we saw that banking 4.0 or OpenX for us could last for some time, though COVID got us into a new generation called banking 4.x, which is digital banking with a seamless end-to-end digital experience. So banking 4.x, it's an evolution of the OpenX ecosystem, where banks become enablers and finance is invisibly embedded in customer lifestyle. And banking 4.x is a mix of 3 major elements: a sustainable growth, where long-term value creation with focus on ESG, combined with an efficient platform banking, banks becoming invisible, with banking being ubiquitous and resilient to financial and non-financial risk. This is what we see as embedded finance, the mix between sustainable growth and efficient platform. But also, it's about customer centricity, making sure that we find the optimum channel where human interaction evolve from servicing to advising. In that case, you do that through data, and you do that through the best digital CX layer. So, and this is what banking 4.x is, the combination of sustainable growth, efficient platform, customer centricity through the enablers of embedded finance, data, and digital layer. Now, looking forward, when we ask the executive about banking as a service, we're very pleased to hear that 38% of the banks already have an in-house banking as a service solution, or are leveraging third-party banking as a service platform. So this is more than 50%, which is a good place. And we are seeing that the remaining either are developing it or are thinking about it. So banking as a service is becoming a reality. And banking as a service is about evolving the innovation ecosystem with different ways, either by the bank becoming a supplier to third party, to B2C fintech, or even to challenger banks, or the bank benefiting from some providers, the B2B fintech, that could enable them to offer a better experience. And the beauty of it is everybody into the banking industry believes that the banking as a service helps innovate, create new products, expand customer base, and create new sources of revenue. So it's time to partner. It's time to partner fast and to offer the best customer experience out of it. Now, when we look into the concept of embedded finance, clearly, what are we seeing here? That the customers are asking us to connect with an ecosystem. And here we ask the customers about with whom, me as a bank, I should be partnering. Very interesting to see that they're telling us time to partner with big tech, with retailers, with hospitality, with telco, with fintech, and so on. Why? Because it's essential to offer the right experience to the customer. How you make this experience happen? By having the right foundations. And we have seen to build the round foundation, it's a mix of having a modern core supported by the right cloud to accelerate the adoption. And once you are there, you create all the microservices thanks to the API. Modern core supported by the cloud, enabling APIs. The biggest challenge is at the modern core because banks today are struggling to have the core at scale. So when we look at the opportunities for the banks, it's about changing the business model, where we can look at the way of as a service. And we have observed different level of as a service, infrastructure as a service, platform as a service, software as a service, and finally, business process as a service. When we look at the value to the bank, clearly, and the ownership, we could see that business process as a service is the ultimate, brings huge value to the bank and create the right ownership. When we looked at engaging with the executive, we have seen that there is several adoption layer, and we want to make sure that as we go forward, they can get involved into more and more of the solution. But for us, a robust bank as a service is here to drive inclusive growth. We believe that the future is about having more and more people joining the banking ecosystem. And bank as a service enables banks to fill business model gaps and address three core challenges related to population that we feel at risk, the unbanked, the underbanked segment. First, it allows to increase accessibility. Second, it allows to innovate through data-centric credit risk model and reach broader populations. And the CX layer is the glue that will hold the ecosystem together. This layer has to be intuitive, it has to be productive, it has to be unified, it has to be collaborative to allow all the product and services to combine, it has to be intelligent, and to make it intelligent, it has to be heavily data-centric. And that brings me back to the point that we described earlier on. To have this digital CX layer is the base of our banking 4.x, offering sustainable growth with an efficient platform with the right customer centricity. And moving forward, it's really trying to project ourselves with a call to action, how to create sustainable long-term value. We try to divide that between a time zone, short-term and long-term, versus also leveraging internal versus external capabilities. So let's jump into what you should be doing immediately. Short-term, leveraging internal, it's about building the digital foundation. And to make that happen, it's really about shift to cloud, scale API, evolve to a banking as a platform, and implement the right CX layer. Moving forward is becoming more and more inclusive and create the new products and services in collaboration with the other players. It's about driving financial inclusion to encompass more populations and make sure to protect the vulnerable customers. In the midterm, leveraging internally, it's about becoming an experiential platform by moving from mass production to mass customization, the famous customer of one, and evolve with the role of the branches. And finally, the ultimum is evolve as an inventive bank, where you need to identify your niche and specifically identify if you want to be in the specific activity, a supplier, an aggregator, or an orchestrator. It's time to industrialize innovation and monetize the core banking capabilities. Banks have a lot of treasures into it that they are only using to themselves. They could, thanks to the bank as a platform, open it overseas and open it to the client. So to conclude, that's why we said at the beginning, it's about time to embrace the disruption and align the priorities. So you embrace banking 4.x. It's about embedding finance in the customer journey. And finally, it's about harvesting the data and creating the right experiential customer journey. That's why we try to summarize it in 20 minutes. I engage you to look at the report itself that will give you much more details out of it. With that said, I'd like now to invite Laurent Herbillon, who is the Director of Open Innovation at BNP Paribas, and who is really at the heart of this conversation. Laurent, how are you doing?
Fine, thank you. Glad to be here with you today.
Fantastic, fantastic. Look forward to meet with you face to face anytime soon.
Yeah, I guess one day.
Laurent, would love to get your thoughts here. Clearly, what have we seen? In the last decade, we have seen banking industry evolve from what we describe banking 1.0 to banking 4.0, and even evolving further to the banking 4.x. And all that has been catalyzed by major industry events like the subprime crisis or the open banking regulations, and even accelerated by the famous COVID, as we see here. And to make that happen, banks had need to adapt by building platform and evolve to a platform economy in the banking and insurance industry. What are your thoughts about the way looking forward of platform business models and in the era of the banking 4.x?
Yes, clearly the platformization or the platform economy has reached, the banking industry due to the combination of higher customer expectations, technologies. You mentioned some of them, cloud APIs, and of course also open banking regulation like DSP2. And now banking are really facing threats, but also we see many opportunities to reinvent, to refresh the way we do provide our services, the way we do service our clients. Basically, we face, three platform business models. I mean, as a service, embedded finance, the ability to embed our product and services in third-party platforms and third-party journeys. Of course, also platform, how we are at the bank going to embed, third-party services to enlarge, widen the value proposition to our customers, and then even what we call beyond platform and beyond banking, how we can serve clients with more value, more services, around our core business, which is insurance and banking.
Fantastic. So this is very conceptual. Could you lend it for us, and you could give us some examples of how BNP Paribas made bank as a platform a reality?
Yes, we are now very well engaged on this roadmap. Just let me give you some examples. The first one, for example, is what we call, our ability, to be the everyday companion of our clients with the right level of trust. For example, in France, we help our clients that are moving and buying a new home, to cut all the bureaucracy and all the things to be done when you move to a new home. And we have partnered with a fintech called Pepernest, which allows our clients to really, shorten, the transition from one home to another home, and optimize all the utilities, bills, and subscription they have to make, when they move. So this is a very, useful service, and it's very well combined with our, of course, ability to lend money to our clients. Another example I can give you is how we help, small companies and small enterprises, to better manage, their accounting and their finance. We have partnered with a fintech called OneUp, and we have embedded in our platform their business financial management tools that helps, clients to better predict, their cash, to better manage, their invoice, and better manage, their administration process, so they can focus on what it is important for them, which is, of course, acquiring new business and new clients. And if we go a bit, beyond, banking, we have in Poland, launched a very interesting platform. We're pretty strong on the agribusiness segment, and we have decided, to provide services, like, satellite crop monitoring services, or give access to our clients and users, or users none are banking clients, but just users, to access services to manage their farms and their business. So we go around the core banking offer to help and support our clients in a new way that hasn't been done before. And also just another example in insurance, in healthcare, for example, in Mexico, where we have this platform that help our clients that are also patients, to better manage their healthcare, to find and choose the right doctors, to also find the best way to meet them physically or online. Just to give you a few examples to show you how we test and explore those new ways of doing business.
So a kind of tricky question to you. What are your key learnings from what you have done? And what would you do differently if you were to build another platform like this in the future?
Of course, I mean, there are many key learnings, but just maybe to share some of them. Of course, we had to update, of course, and then increase, our tech capabilities in terms of cloud. That's what we do right now with IBM. Also, we had to improve, the APIization of our services, to provide those services, to integrate, third-party services, or to embed ourselves in third-party services. That's the main learnings, but also we have to change the way we do business. We had to change, the way we organize ourselves to serve and collaborate with third parties. So that's why, we have engaged in many open innovation initiatives, to better, identify and connect, the best startups, the best technologies, the best fintech provider, and to engage with them in a very cooperative, partnership, and then to make sure that we're going to bring, the best of breed in terms of services and offers to our clients. So certainly there are things, that we would do differently, but I think we also are adopting, a more agile way, or agile at scale way of doing things, and we learned quite quickly and faster than in the past.
Wow, impressive to see how much in the last 12 months we had to accelerate the learning. And one thing that BNP Paribas is quite known for is partnering with third party. And you gave us very good examples, partnering with third party to distribute all your services, being in insurance or consumer credit towards, where BNP act as an enabler and is becoming more and more embedded into customer lifestyle. The open banking wave is accelerating. It's powered by open API, banking as a service, and we are seeing that all of our banks, 2 out of 3 banks, already have one in place. In your experience, how bank as a service platform could unlock new value for players like BNP Paribas?
Yeah, I mean, I see embedded finance, as pervasive finance. That's the ability really to be everywhere in every ecosystem that are served by third-party platforms to make clients' life easier and more comfortable. And of course, finance is key to pay, to borrow, to get insured, and also to provide those services, for faster, with a higher quality, more tailored to the customer needs. And for that, of course, you need data. You need the ability to analyze that data. And what we think, that embedded finance could bring is our ability, to be everywhere and to push our product and services through new channels and push those services in new ways, and especially using API as a product, and also the ability of having people inventing services with our APIs, meaning that, for example, we have launched 2 years ago, our API store, where we expose not only PSD2 APIs, but also, premium APIs that allow existing customers or new customers, to test our services. And we think, that open innovation is going to be key, because we think that a large community of developers are going to invent services that instead of us, actually, they're going to have ideas that maybe we don't have to use our APIs. So we are broadening, the spectrum. We are extending our reach to expose our services, and so they can be used, by more and more, e-commerce merchants or platforms in new ecosystem: health, mobility, silver economy.
That gets very well to the next question. But before that, to the audience, if you have any question that you would like to ask Laurent or myself, please, it's the time to write it into the chat so we can come back to it. Laurent, can you hear me?
Yes.
Yes, okay. I think that has an internet. So a question you are mentioning about the ecosystem, and clearly today, one of the things that comes out of it is there is one of three executives believe there's competition from the new age players, the fintech, the challenger banks. And in your opinion, what makes these new age players formidable in terms of the new way of doing business?
Yeah, I mean, they have been able, to really spot, some of the pain points in the customer journey, and they've been able, to really focus on those pain points using, state-of-the-art technology to solve this, and then build on this pain point solving, additional services on top of that. I think that's really, the key point that we have learned from those players.
So I like your answer in terms of the small players. Let's talk about the big one. With regard to banking as a service, we are really witnessing a growing collaboration between big tech and traditional banks. There are two examples that are quite relevant lately: Apple Card and Googleplex. Googleplex being a fantastic platform that Google is creating and is inviting banks, Citibanks, BBVA, and others have already joined that, to offer the famous super app where Google become the destinations and all players comes around it. In our survey, big tech are emerging as most preferred banking alternative among customers. Do you see big tech and bank collaboration as a win-win and long-term solution for all, being the customer, the incumbent, and the big tech, or rather a threat?
I think it's going to depend on on the market you're talking about, the culture, the customer behavior. In some markets, for example, if we have China in mind, with the super app, such as in this country. I think that banks have something that which is unique in terms of brand, because when you talk about super app and like the ones you mentioned, behind this we have data, but with data comes responsibility and trust. And I think we have something which is absolutely key, is we have trust from our customer, and we know how to use data, respecting ethical rules. We know how to secure data, and I think that's why we really focusing our platform approach on being this trusted companion of our clients in their daily life. So in some cases, I think we see a very we can see a very productive partnership and cooperation. In some other areas, I think clients will prefer to deal with banks and incumbents because of trust and because the way we're going to handle their data.
Nice. So my last question before handing it back to John will be about data. More than 44% of the respondents of our customer survey says they face medium to high friction when interacting with banks. We see incumbents struggling to offer superior experience to their customers. On top of this, customer expectations are changing fast, thanks to the like of Netflix or Amazon that are giving this entire experience. In this age of hyper-personalization, how banks like BNP Paribas are mining and managing its data treasure?
Yeah, again, I mean, and sorry if I keep just maybe repeating what I've said. I think of course we're sitting on very high quality data, but the first our first concern is really how we're going to respect of course the regulation, and how we're going to make sure that customer trust the way we handle the data. We have started of course to leverage and use the data to improve the way we onboard clients, to simplify the way they access to their services, to the product, the way we do the KYC, for example, on how we can make sure that we don't ask 5 or 10 times the same documentation or the same question. So we have really started to improve the way we engage with our customers through a better use of data, using of course artificial intelligence, but not only on the front but also in the back. We using data to improve the process and to speed up the answers that some of our clients are waiting for from us. So this transformation is very well on its way, and always in the respect of the regulation, the security of our clients, and also the privacy that we owe to our clients, that feed our brand and the trust they have in in BNP Paribas.
Laurent, I'm so happy to hear that from now on, when I will apply to something at BNP Paribas, I will not need to answer again the same question I answered before. This is, I love it. Thank you so much for this slide. John, back to you. John, you're on mute. Probably the most famous sentence of 2021 has been, you are on mute. And you're still on mute. Let me take it forward. In that case, seems that we are not getting John. Laurent, thank you so much for your insight. Very useful to know how the evolution is heading now. And now I'm going to pass it to Jennifer Lindstrom from our Invent team to walk us through what's the future about enabling banking 4.x. Jennifer?
Thank you, Elias and Laurent, for a great presentation and lots of insightful thoughts. I thought what I would just highlight on is some of the areas that we see banks struggling with as they're actually trying to move to 4.0. We work with banks across the full spectrum from vision to delivery. So talking about innovation and helping them plan fintech ecosystems and how are they moving forward to service the unbanked, and then all the way through to delivery and run. But where we've seen that most companies are actually facing challenges is in the translation layer. Laurent sort of spoke about it a little bit and how you have to sometimes reorganize yourself, reprioritize things, and figure out how you're really making sure that the business and the technology folks are talking to each other. A lot of banks have legacy silos, and so there may be pockets of vision and innovation, differentiation strategy from the innovation strategy all the way through to the data strategy and obviously in the industry. But then how does that actually get documented and translated so that it can actually be handed off into delivery and make sure that the agile development is happening in lockstep, and they're working off of the same backlogs, and everything is moving at the speed of light. If you switch to the next page, Elias, next page. So ultimately, if we ignore the middle area, it's going to ultimately result in a higher cost to bring the vision to market and less user and client satisfaction. So we really look at it in 4 areas, which is the business alignment. Are you aligned across all of the business? And lack of an integrated program oversight really can set folks back. And it's not only, between the business and IT, but there's lots of other constituents that need to come in from whether it's risk or legal. And we've got a great innovative process on how to bring these groups together. Obviously, there was a lot of discussion about human-centered design, and we really see that lacking a robust capability to really design the user experience or the employee experience, because we're seeing more and more banks now realizing that to get to the Amazons and the Zappos of the world, you have to have a really good internal employee experience, because both to retain your workforce, which is becoming more and more difficult, but also to drive the experience that will move forward how you interact with customers. The solution architecture, and I would take this, not only as a technical solution architect, but overall the omni-channel architecture, how you're going to bring this vision to life across every single touch point. And then the transition to development, making sure that there are business requirements well documented to make sure that the human-centered design and the user experience is going to be well implemented is of the utmost need now. As everybody, all customers are really thinking, and even employees are thinking about their next best experience being the one that they had at Starbucks or, at a commercial, at a real retail outlet, not at a bank. So we really look at this as having a Team Zero methodology, which targets that, and solutions in the middle of that. Next slide. Sorry, next slide, Elias. So when we talk about what we actually produce, we really give, actionable deliverables, not shelf trophies. So we're looking at delivering strategic vision and value realization plans. We're infusing design-centric capabilities into what is oftentimes, not great documentation of the requirements. So we're delivering personas, journey maps, wireframes, or prototypes. Prototypes we find especially helpful because they're a visualization of what the vision is that everybody can really relate to. And then a future state architecture design that really, leverages the best standards and references those, and then also looks across industries so that we're not just only focused on banking, but especially looking at places like life sciences, where it's another highly regulated industry, to be able to bring the design to to fruition. And then designing that and making sure we've got the backlog of epics, features, and user stories that can go right into agile delivery and really deliver the pipeline. So those are just some areas that we've seen that folks are missing in the development and the innovation. And as we're all trying to move so quickly and really take this to the next level, we find it super important to make sure that you're looking at that translation into the solution in order to move forward in a really agile, fast process. And I will now hand it over to Anurag to talk about the big need of data to do all of this.
Thank you very much, Jennifer, and thanks everyone for a great conversation so far. I'm going to talk about using our Capgemini's 890 platform for credit analytics, because we see that as a big focus area for banking going forward. So if you flip to the next slide, Elias. Next slide, please. Well, while Elias is doing that, I'll tell you a little bit about Capgemini's 890 platform. Right? Oh, here it is. Okay. So Capgemini's 890 platform is a fully, AI and analytics as a service, managed services platform, which essentially gives you like three pieces of functionality, if you will. Right. One is a data exchange, which lets you ingest data from, multiple sources, be it internal or third-party data sources. An analytics workbench, which lets you quickly create analytical models on the data, and then an insights exchange, right, which lets you publish those insights into more monetizable formats or monetizable channels, if you will. That's what 890 is at a very high level, and I'll talk about it has a lot of other features and functionality, which I'll talk about in a few minutes, right? So throughout the conversation today, you heard about the importance of platforms to banks, right? So the number of platforms are kind of exploding. You also heard about the importance of an ecosystem play, where banks need to build ecosystems with fintechs and big tech so that they can all play together to create this whole network effect, if you will, right? You also heard about the importance of harvesting data, both internal data as well as external second-party, third-party data, to get better insights. All of this, combined with the fact that banks are also looking at sustainable growth, right? There's a very important challenge facing banks. How do they, service the underbanked community? So keeping all of these factors in mind, what we decided to do over the last year is, create a verticalized offering on top of the 890 platform, which is focused on credit analytics, right? So what does 890 give to you for credit analytics? It gives you access to top data marketplaces, so the Amazon data marketplace, Google data marketplace, Snowflake, Oracle, and so on and so forth, right? Plus, over thousands of other data sources, which can be treated as non-traditional, views of credit data, if you will, right? So for example, you could have access to utility bill payments, right, across the globe. So all, as well as, your digital footprint and so on, right? It also, helps you create like a secure data exchange platform, which you can use to exchange data with your partners. So it could be the bureaus, the credit bureaus, as an example. It also gives you 130 odd analytical models and AI models, which have been pre-built and which can be leveraged very quickly, customized very quickly to suit your needs, right? I talked about the analytics workbench, so the state-of-the-art workbenches such as H2O and Data Robot and SAS and so on, right, is available on the platform. Finally, I think Laurent talked about the importance of privacy and honoring your customer data privacy, right? So it gives you a regulatory compliant environment with anonymized data that you can use for credit analytics. So what does this enable for banks? It gives them a means to quickly monetize their internal data, right, while respecting the privacy of their customers. It helps you seamlessly integrate with second and third party data sources, and believe me, it's no small challenge, right? The second and third party data sources, the number of sources is exploding, and it's a continuous integration challenge. So having a data exchange to be able to seamlessly exchange data with third parties becomes very important. The third and the most important aspect, right, is creation of new and inventive credit risk models, which looks at customers with thin credit histories, right, and makes decisions as to whether they are eligible for credit or not. Because ultimately the goal here is to extend the reach of the banks into the unbanked population, right? And then finally, it helps you quickly set up, through a whole API factory and an API gateway. It lets you set up a collaboration with fintechs and big techs where you can easily test, some collaboration models, and then decide whether you want to scale up, that model or not. So for example, there are a lot of fintechs in the whole, credit analytics and the credit decisioning space who already use inventive methods to drive credit decisions. So you could easily integrate with one of those players in this environment, in almost a sandbox environment, and see whether that succeeds, make a fail fast decision, and then scale up based on that, right? So our conviction is that, platforms are going to be the way forward, right? You see some research that we have published on the right-hand side. So by 2023, more than 33% of banks will be using platforms and credit decisioning platforms to drive more decisions, like real-time credit approvals, as well as, loan approvals and so on. What you'll also see is that the way the data is being harvested and consumed by the business is going to change. It is going to happen through data stories, which is automatically generated through AI, right? So this platform gives you a leg up in achieving that vision. And yeah, so that's my presentation, and we'll be here on standby to answer any questions. So back to you, John and Elias.
Well, I'm hoping this time that actually you can hear me.
We can.
Is that true?
Yes.
Can you hear me? You can. Uh-huh. On the phone as well as the technology then. Great to hear from everybody in terms of presentations this afternoon. I think some great insights from everybody in terms of what we've been listening to. I had one or two questions. Actually, Elias, you talked in terms of speaking to 8,000 interviews or undertaking some 8,000 interviews. Was there a difference between different geographies? Was it different from, I don't know, for example, from Asia to the Middle East or Western Europe?
Indeed, and by the way, John, we are struggling to hear you correctly. So just as I answer, if anything you could do, definitely. We on this 8,000 customers, by the way, for you, happened that we have a slide showing you that we really interviewed with people from around the world, first of all, being from age groups, from the 18 to 24, 24 to 40, 41 to 60, and baby boomers. We also looked at it from across the world, being in Europe, in Americas, and APAC. We also looked across geographies, location, metropolitan area, medium-sized city, large town, small town, rural area, and so on. And of course, by all means, there are differences. Few differences that worth noticing. The first one will come by no surprise: younger population, more urban and more metropolitan area, is way more inclined for digital banking. That's no surprise here. But what starts to be quite positive or quite surprising, depending where you stand, is even Gen X and baby boomers are more and more questioning the traditional way of banking. And one of the questions that came quite often is, have you gone to a branch bank in the last 6, 12, 18 months? And across the board, the answer is no, or barely not. So we are seeing that even the older generations are moving into digital. We're also seeing that not only metropolitan area are quite keen to that, which is no surprise, but also medium-sized city and large town, as well as the rural area, are adopting more and more the situation. And I think the example that Laurent gave about the agriculture sector as an SMB opportunity, leveraging data and leveraging a device and an app, shows that the adoption of digital is across age group as well as location or urban or an urban area. So clearly there is a need for that. Back to you, John.
In terms of the changes, obviously fintechs have a huge impact on the way the world is changing. In terms of the ease of finding the right fintech, how challenging is it for a bank to actually find the right fintech for the level of service and innovation they require?
Laurent, do you want to go first with this question, because you are the one living it day in, day out?
Yes, go ahead.
Oh, I start. Okay, so for me, clearly today, fintech has become a very trendy term, and you see it popping up all over the place by all means. One thing that we have observed, and we will be discussing much more in the coming weeks as we release the World FinTech report, is there have been a significant maturity into the fintech ecosystem, and there is more and more appetite for the banks to work with the most mature one. We call them scale-ups. These are the one that has a higher maturity and the more ability to scale. And the biggest challenge that we have observed with the collaboration, the effective collaboration between banks and startups, is move away from a POC, proof of concept, into innovation at scale. And Efma and Capgemini, by the way, has the FinTech Visor, which is a website where we are here to foster collaboration between the startup ecosystem, a curated startup ecosystem, and the banking ecosystem. And we have been observing for the last 12 months a significant reach to the fintechvisor.com website, because both parties need each other to collaborate at scale. Laurent, anything to add from your side, from the banking side?
Yes, very quickly. I mean, what we've been doing for the past years is really, we have industrialized our, fintech or startup cooperation. We leveraging, internal, startup relationship management platform, partnering with partners like, Startup Bootcamp, Plug and Play, and we just, streamlined the process from, the business line needs and the way we do source and match the proper startup. We have organized through acceleration program, the MVP development, and today we have reached, a ratio, a POC MVP to production of more than 1/3 of those POC, go to industrialization. So we have started, testing and trying various things, and now we are in a very industrial process to do that.
Laurent, one of the key issues is about partnering and about building partners in this platform environment. And you've talked about some of the activities with different partners. What choices, how difficult has it been to make choices on which priorities you choose to work with in the early stages?
I mean, and what you mean in the early stages? In early stage startups?
Early stages of working on the platform business. I mean, to make choices as to which sectors you're going to focus on. Okay. What was the driver? Was that customer centricity? Was it profit?
Sorry. Yeah, very good question. Actually, we have defined, key priority ecosystems, and we really based our choices on customer, expectations, and we are focusing, on housing, mobility, health, silver economy, and those choices have really been driven, by customer needs, and also our ability in this first step and exploratory step, to serve those needs. And of course, we will extend, our platform strategy to other ecosystems, but the first ones that have been chosen, have really been chosen, on the on customers' feedback.
Yeah, that's great. Well, I'm appreciative of all the work that's gone into producing this report. Thank Capgemini and all of the Capgemini team for the excellent work in putting this report together. I hope all of those that have been involved with the webinar get an opportunity to read it in detail. If you have questions, please direct those to Elias and his team, who will be more than happy to assist in giving more information. I think I'd like to thank also the other speakers this afternoon, because, this is a major issue for the industry as a whole. And it is shaping a new direction of travel for the banking industry. The background information is really valuable in assisting so many banks around the globe, but in many regards, the journey has only just started. So I wish everybody success with it. Thank all of our contributors today, both those listening as well as those speaking, but particularly to Elias and his team for putting together this excellent report and presentation. So thank you all very much. Stay safe, and I wish you success in developing changes within your own banking organization going forward. Thank you very much indeed.